What's going on, everyone? You're back with your boy Jono for another quick math lesson. Today we're going to look at the language of income, or how much money do we actually make. This is something that's really important. There's not a huge amount of maths in this lesson, but being on top of the terminology is incredibly important. Not just for your maths career, but afterwards when you're talking about money in the real world, being on top of this language is incredibly important so you can communicate with people in the same way. Based off the census in 2022, the median Australian salary is $54,890. But what does this actually mean? Does that mean that most people are walking around earning 55 grand every year and they've just got that in their pocket? Or is there something different happening? So there are three types of income that we've got to be on top of. Each of them seem like they're talking about something quite similar, but they're very different, and it's really important to know the difference. So the first one is our gross income. This is what your salary is. This is how much you get paid per hour, paid per year. This is what's coming in. Your taxable income is the amount that gets taxed on. It seems really similar to your gross income, but we can change that number so you pay a little bit less tax. And that is something that is absolutely going to come up again and again throughout your whole life. Finally, we've got this thing called net income, and that's what you actually earn. This is the money that will come into your bank account. This is the money that you have. So knowing the difference between gross, or your salary, and what you actually have is incredibly important. You can't just budget for your salary being like, yeah, sweet, I make 100 grand a year. You're gonna lose some of that to tax. And if you're not on top of that, your budgeting will be completely out the window. We're gonna do a little bit of an income flowchart. So the first income is your gross income. That's everything that's coming in. And this is usually made up of two things: what you get paid from work and what you get paid from your investments. Say if you've got a rental property or some stocks, that does still count to your total earnings for the year. And then that goes to our taxable income. Our gross income will determine what our taxable income is. The reason that these two numbers are different are because we want to encourage some things, either as employees or the government wants to make things not taxed, so you're more likely to do them. So you're not going to lose money on those ideas. The first thing that changes between your gross income and your taxable income is this idea of deductions. These are essential work expenses. So something you need 100% to have in order to fulfill your job. A really good example of this is if you work on a work site, you have to have steel-capped boots. This is a government law. You're not allowed on the site without them. So most people don't just have a pair of those lying around, so you've got to go out and buy some steel-capped boots. Because this purchase is solely for work, that's what is required of you to do your job, you can deduct this from your gross income so you don't have to pay tax on this item. You obviously still have to pay for it, so that does kind of suck, but you will be getting like a 40% discount because you're not spending tax, even though that discount's not going to come till the end of the year. Another thing that does happen is that if you're donating money to charity, you're not going to get taxed on that either. Let's say that you're just like a legend and you donate $1,000 to a charity. It would be pretty rude if you donated that money and then had to pay tax. You'd be way less likely to do it. So companies do this as a way to reduce their overall tax bill by giving money to certain charities so they don't have to pay tax on that amount of money. Finally, if you've got a TAFE loan or a uni loan, that comes out before tax. So you're paying back the government before you get taxed on it. So this is another way where you're not doubling up what you're giving the government. Now we've got our taxable income, and that's what we pay tax on. And after that tax has been taken out, we get our net income, what we actually get to keep. In Australia, there are two different things we've got to look at. The first one is just our tax. Based on how much money we earn, we've got to pay some back to the government. And we also have this thing called the Medicare levy, which is 2% of our total income that goes straight to healthcare. Again, these are things that reduce your overall amount of money in your bank account, but this tax money is used to better Australia, so there is a lot of value in paying your tax. So what we've got to really take away from this is that there is a massive difference between our gross income, what we get told we're paid, our salary, and our net income, what we actually walk around with at the end of all of these deductions and this tax. Making sure you're on top of this is essential to budgeting correctly. Otherwise, you might just go spend like you've got 100 grand, but you're only bringing home 60, And that's a massive difference. So to turn our gross income into our taxable income, all we've got to do is take our gross income, all the money that's coming in, and then we've got to minus off any donations or deductions, those essential work expenses. So in this example, we've got $75,000. We made $2,000 worth of charitable donations, and then we also had $1,800 worth of deductions or things that we spent on work. So to find out what our taxable income is, all we do is 75,000 minus the 2,000 minus the 1,800, and that leaves us with $71,200. You can see already that the difference is noticeable. Instead of paying tax on $75,000, we're only paying tax on $71,000. So you're going to pay less tax to the government, and that is a massive saving. So being on top of these deductions is why people keep receipts throughout the year for all that work stuff. This is just an introduction to some of this financial literacy information. Next lesson, we're going to go through how we actually work out how much tax we pay, but making sure we're on top of these terms, gross, taxable, and net, is incredibly important just as a jumping in point for all of these questions. Thanks so much for watching this lesson, and I'll see you later.